boy, when have we seen, and I've been around longer than you, I won't say when, Jim, that so much uncertainty. And I think I was listening to Anna Wong, who I have a lot of respect for, that maybe the Fed wanted to gin up these rate cut bets to over 50, but it's still not a great look, because 50-50, basically a coin flip, a little bit over 50. I don't think, we don't usually go into a Fed meeting with this much lack of clarity in the market, right? The Fed likes, no uncertainty. So usually it's a little closer to, above 50% or way below. So I don't know, whatever the case, we'll do an autopsy afterwards. But, I just talked to an asset manager who said to me, like, after all this, he thought also the Fed kind of lifted these probs in the market that if the Fed doesn't do 50, it just looks really bad. But who knows, Tim? We just don't know. Like you said, many of the big economists still say 25 basis points. That's still more the consensus. So I think, like you're saying, what goes on from there? Crucial is the dot plot, right? So either way, we could do the scenario analysis. If they do 25, what do the dots do? And if they do 50, what does the dots do? So we have 2 more meetings this year. We want to see, given whatever they do on Wednesday, what's the consensus that they're going to project for the next 2 meetings? Is it build in at least 1 more 50, 2 more, none? What's the array of dots show? Like, how strong a majority is it to get to that median? And look at next year. They projected last time, these numbers are all going to move around, but 100 basis points next year. Do they bring in more for next year as well? And the market's already pricing that in a year's time, we're below 3%. The funds rate is, decently over 5, their range. So there is just a lot to decipher. I am sure there's going to be so many questions to Powell, no matter what they do for clarity. So there's a lot to unpack for the bond markets for sure.
When you think about Powell's presser and just how closely investors are going to be parsing through his words, how is he going to be able to kind of convince the market that we're still headed towards that soft landing, that he's, easing up on policy, but not too much because it's signaling that there is some weakness in the economy that perhaps people are missing?
Right, exactly. I mean, that is the key. I was looking at the Bloomberg pages, our indices that, bond indices, the U.S. Ag is up about 5% this year so far. So all these bond markets doing well and the stock market's still doing well. I know we're seeing a rotation, but there's a lot, Emily, like you're saying, based on this, that they pull off this, ephemeral soft landing. So I think, he's got 2 things to say. If they do 50, he's got to make clear that they just, they're not panicked. They're not really worried still about the labor market, but they felt like inflation's in line, that policy was too restrictive. It was, smart to front load. Or if they do 25, he's got to explain why that's enough and that they're willing to go big if they need to. Again, the Fed has made clear they really don't want to crush the labor market. They want that soft landing. So I think in any case of what they do, Chairman Powell's he's going to have a lot of notes, like he usually reads from his notes and try to stick to the script to try to explain why they're willing to go bigger if they go small this time, or why, like Emily, you got to, it's not a panic, and someone said to me, maybe, that's why these stories were in the press last week, that they want that pricing in there at least so it doesn't totally surprise.